Did you know that even after the recent 3-for-1 Tesla stock split, investors are already looking forward to the next split? Granted, the stock split allowed more ordinary investors to buy Tesla shares because of that. They are impatient for the next split. If you want to know more about it, you would not want to miss this. A portion of the company is more easily affordable for regular investors when stocks are trading in a comfortable range. According to Lindsay Bell, Ally's chief money and market strategist, that creates greater interest in the shares, and more interest equals more individuals trading the stock. Prior to continuing, Moo created a new role known as the industrial chain. Suppose you want to find out the stocks that have the ability to fluctuate in the following days or months. The industrial chain will help you a lot. Offers a thorough overview of the hottest sectors like semiconductors and electric vehicles. Finding stocks quickly, either upstream or downstream, allows you to concentrate on specific industry segments more rapidly. Also, as segments are tied to industry histories, you could estimate price variations faster without reading many studies to establish the relationships within one industry. Description includes a link. Tesla's 3-for-1 stock split took effect in late August after the firm declared the split in early August. Prior to the split, shares finished at $891 and began trading at around $297 per share the morning the split took effect. For each share held after the close of trading, Tesla paid a stock dividend equal to 2 shares in order to implement the split. The stock split lowers the price of the shares and increases their availability to a larger group of individual investors. It also makes trading options in the stock less expensive. When Tesla first proposed the stock split, it said the move was primarily designed to assist the firm provide every employee the option of obtaining shares in Tesla, and that enhancing employee happiness would help to maximize stockholder value. The first time Tesla split its stock in August 2020, shares had gained 81% between the split announcement and the day of the stock split. In the month following the split, Tesla shares declined around 14%, but rebounded in less. Then 2 months and were up nearly 36% 6 months after the split. Editor-in-chief of Investopedia, Caleb Silver, said shares of Tesla are up 28% since it announced its most recent split, but it's still down 16% for the year as investors have learned that it is not immune from a slowdown in spending, especially discretionary expenditure. A stock split does not necessarily affect anything about a company's business fundamentals. It's merely simple multiplication and division. Similar to its most recent split, Tesla divided its stock price by 3 and multiplied the shares of each stakeholder by 3. Because of this, after the market opened on August 25th, Tesla's stock price dropped from over $900 per share to roughly $300 per share. Although stock splits don't change the value of owners' interest, they can be a useful tactic to make purchasing a stock seem more affordable. Retail investors are left wondering when Tesla would split its shares as a result of this. Some people are curious as to whether Tesla follows any particular formula when it comes to dividing its stock. Some people believe that looking at Tesla's stock split history is necessary to forecast the future stock split. In August 2020, Tesla split its shares for the first time with a share price of about $15,000. When the EV firm split its stock for the second time in August 2022, a share was worth between $900 and $1,000. It's crucial to remember that Tesla splits its equities because it knows they will increase in value and wants to ensure that its workers may purchase shares at a lower cost following the split, not just to ensure that the price of the stock rises. Purchasing Tesla stock in August is a lot simpler than it was prior to the split, though. When the company's shares were trading between $800 and $900. That means that, while still a substantial sum of money, a $300 per share price is far more accessible to a larger number of people. Compared to when the stock price was approximately $900, it is now considerably simpler for regular investors to purchase a piece of the top electric vehicle firm. Currently observing the pattern of Tesla's stock splits, the company is gradually lowering its stock price. Retail investors should anticipate further stock splits in the near future, so this seems like good news. Based on the company's past stock split records, it appears that Tesla is making every effort to split its shares before they hit the 4 digits in the $1,000 level. This is the foundation upon which our prognosis will be built. Some estimates for the value of 2028, $456 in 2029, and more than $500 in 2030 if that occurs. That is, once more, assuming Tesla divides its shares 4-1. In 2030, when the stock price surpasses $500 per share, Tesla is likely to implement another stock split if that occurs. Like the last split, this one might be a 3-for-1 split. Nevertheless, there are two ways that Tesla could split its stock. The first would be a 3-for-1 split, and the second would be something larger, like a 4-for-1 split. Based on the assumption that the company's stock is approximately $500 in 2030, if they split the stock 3-for-1, the stock price will be about $170. Although it doesn't seem likely that Tesla will offer more than 3-for-1 at the $500 price point, we might as well consider this prediction. Having said that, they could split stocks at least twice in the cautious scenario. Take note that it is a little more cautious due to the need to account for robo-taxis, bot energy, and Tesla insurance. Calculations show that the average car sale in 2022 was $57,000, with estimates for 2023 and 2024 being $55,000 and 2025 onwards, maintaining an average of $50,000 per vehicle. To find out the precise performance of Tesla stock, visit Moomoo link in bio. There will be a stock split if Tesla's value increases to $608 per share by 2023 and $941 by 2024. That were provided were extremely cautious. Despite everything, at least 2 stock splits are possible this decade. Tesla focused on building stunning and opulent vehicles that would exalt electrification, whereas many automakers tried to provide reasonably priced goods that could be mass-produced and readily marketed. Our goal when we created Tesla a decade ago was the same as it is today: to accelerate the advent of sustainable transport by bringing compelling mass-market electric cars to market as soon as possible, Elon Musk stated in a 2013 company post regarding Tesla's mission. After that, Tesla strengthened its business strategy and concentrated on employing a tripartite method to sell, service, and charge its electric vehicles, which helped the company achieve lasting success. Tesla chose to sell its cars directly to consumers rather than through franchise dealerships, as other automakers preferred to do. Tesla thinks that its amazing global network of over 400 owned brand showrooms and galleries throughout the years allows for speedier product development and better customer experiences when making purchases. Additionally, Tesla makes every effort to speed the repair procedure. In certain areas, the company uses mobile specialists known as Tesla Rangers who are available to visit homes upon request. However, the service may also be provided remotely in certain circumstances. For example, the Tesla Model S has the ability to remotely transfer data, which allows Tesla Rangers to inspect and address certain faults without physically viewing the vehicle. Additionally, Tesla has solved a significant issue with electric vehicles by building a network of supercharger stations to handle the question of where and how to charge them. Drivers of Tesla automobiles may fully charge their cars using these smart charging stations in about half an hour. Tesla's stock will rise if the company keeps going in the direction that experts predict it will take. Since of this, most retail investors expect a stock split since they will no longer be able to afford to purchase Tesla shares when they become too expensive. If you want to learn more about Tesla stock surprises, subscribe to this channel.